Hey everyone, now that we have completed Q3 results, I've compiled the list of companies that have posted blockbuster results. So overall, there are 21 companies in my radar at the moment. I'm sure there would be more names, but I would be discussing the companies from the list of nearly 300 odd stocks that I am tracking. Maybe if I miss any promising name, you can mention it in the comments and I'll have a look. Coming to the 21 top stocks from my list, this is the first part of the video where I would be discussing 10 stocks for the sake of everyone's time. Otherwise, the video would become very lengthy. Moreover, these 10 stocks are already part of my previous discussion where some of them are part of the next multi-bagger list and some are part of my Diwali picks. In the next part, I would be covering another 11 stocks that would also include some new stocks that I've started tracking in the last few months. Okay, before we proceed, just a disclaimer that this is not a buy or sell call. The idea is to share stocks that have outperformed brilliantly in the current quarter so that you can dig further and you can do your research to identify potential stocks for investment. Alright, let's get started with this video. So the first stock is Tata Motors. It has been a stellar show by Tata Motor in Q3 with revenue growing 25% year on year, EBITDA up by 60.6% year on year, profit before tax stood at 7,600 crore versus previous year profit of 4,400 crore, so that's 70% jump in profits. Company's cash flow stood at 6,400 crore versus 1,100 crore in previous year. What a turnaround story it has been. Tata Motor that was once struggling with consistent fall in margins and making loss at net profit level has now reported 55,000 crore of operating profit and net profits have grown from peak loss of 28,000 crore to now at profit of 19,700 crore. With this, company is now trading at a P ratio of 17 and price to sale of 0.8 and EV to EBITDA of 7. Mind you, this valuation is after 2 times growth in share price within last 1 year. But still valuations are reasonable. If you recall, Tata Motor is already a part of my Diwali 2023 picks and stock has already jumped around 50% from those levels. As far as future is concerned, Tata Motor is eyeing big on EV revolution. Company already commands a strong leadership with nearly 70% market share. Although I expect market share to fall with more competition, but Tata Motor would immensely benefit from the growing pie in EV space. For instance, Indian EV industry has grown around 20 times between FY20 to 23 and government has set up a target of 30% EV penetration by FY30. That reflects further 12 to 15 times growth. Company has already launched Tiago in mid-hatch segment, Express T and Tigor EV in entry sedan segment and Nexon in compact SUV segment. Company has big plans to launch new EV vehicles like Harrier EV, Avinya, Curvy EV and Sierra that are more premium with modern design. Although Tata Motors still has high debt which currently shows a debt to equity of 2.38 on screener with balance sheet showing total debt of 1.27 lakh crore. But company is consistently reducing the debt and today the net debt of the company including the cash position has reduced to 38,700 crore. Hence, even after a sharp rally in Tata Motor in last 1 year, I think it's still worth considering it to add in a systematic manner for long term. Stock number 2 is Trent. The parent company of Zudio, Westside and Star Bazaar has posted a stellar set of numbers with revenue growing 51% year on year, operating EBITDA up by 142% and net profit up by 132%. This growth is fueled by Zudio that has grown leaps and bounds from 69 stores in Q3 of FY20 to 460 stores now. I did a video on Trent last year when it was trading at around 1300 and today it is at around 4000. That's 3 times growth in the share price. I clearly remember when I discussed about Trent, many people commented that it is expensive. And I mentioned that you can't just look at P ratio of every company. Yes, P ratio is important, but it only tells the past picture. You need to study the business to understand the future potential. When I did the video, Trent was at P of around 145 and today it is at P of 175. While the P has not jumped much, its share price has tripled in last 1 year because of huge earning growth. Is it expensive today? Yes, no doubt about it. But can you get it for last year price? Well, I don't think so. The better approach here would be to wait for some correction because the valuations are now overheated with EV to EBITDA at around 70. Let's see how things goes, but this was a great opportunity last year. Not sure how many of you picked it up. By the way, friends, if you want to access this list of more than 300 stocks that I am tracking, you can get it for free on my website. And in case you want to know which stocks I like personally and investing my own money, you can explore my weekly video series, where I share one exclusive video every week. It also includes detailed analysis of key events in the economy, stock-specific ideas, and a close community of long-term investors. In fact, I have an Excel tracker where I'm tracking quarter results of more than 200 companies along with my comments. You can check that on my website. Third stock in the list is KPIT. This star EV software company never fails to surprise with its consistent outperformance quarter after quarter after quarter. It is also the first company of my next multi-bagger series and has already grown around 3 times from those levels. In latest number, KPIT profits have grown by around 55% year on year and revenues are up by 31.5% year on year. This slide shows the extraordinary journey of KPIT with 14 quarters of consistent growth in both revenue and EBITDA. As far as valuation is concerned, today KPIT is commanding a PE ratio of 84 and market cap of about 45,000 crore. Is it expensive? Answer is yes. There's no doubt that KPIT is trading at expensive valuation, but the catch is that company is consistently doing well quarter on quarter and hence commands a premium. I think at current levels it's better to wait for some correction. If you have it, you can hold it for long term, but I'm sure that there will be better opportunities out there to invest any incremental money. But yes, results are fabulous and there's no doubt that the future of KPIT is very bright. For those who don't want to wait, it's a fantastic SIP grade stock to be considered adding in a systematic manner. But of course, you need to do your own research before investing your money. Now, fourth stock in the list is Newgen Software. After falling around 50% in 2022, Newgen Software has seen a one-way rally with share price rising nearly 4 to 5 times in last 1.5 years. What a journey it has been. If you're following this channel, you would know that I was bullish on this company since COVID days. It did fall nearly 40% after I discussed it, but I kept my faith and did multiple videos to share my confidence. And look at where it is today. Now, what could be the reason for this jump? The answer is Newgen business model. Many retail investors don't understand the earning potential of SaaS-based software companies. Unlike your traditional Indian IT companies, Newgen is into software development with software as a service model. The best part of this model is operating leverage that eventually comes into play. Because initially, it takes a lot of investment to create softwares and that drags down the profitability. But eventually, when the software is ready, the revenue directly starts flowing into the EBITDA and that is reflected in the margins. In the process, companies start generating significant free cash flow. Newgen used to command margins below 20% in the past, but now the margins are at 20 to 23%. Margins did zoom exponentially during COVID, but as compared to pre-COVID levels, margins have improved. Not only that, Newgen has been growing consistently both in terms of revenue as well as profit and the growth has been very good. In the latest Q3 results, company's revenues have grown at 27% CAGR, net profits have zoomed 44.5%, and as far as valuation is concerned, after nearly 4 to 5 times growth in last 1.5 years, Newgen valuations are looking quite rich at a PE of around 51. So I'm not expecting a lot of upside in the near term. But since it is still a small cap company with a market cap of about 11,000 crore and the market Newgen catered to is huge. So I'm still betting on Newgen for more wealth creation in the long term. Although in the short term, I feel the valuation comfort is low today. Fifth stock in the list is CDSL. Again, CDSL is a part of my long-term SIP grade stock picks. I always say that it is the beginning of Indian stock market journey. Today, we have nearly 14 crore demat account as compared to 3.5 crore demat account in FY19. The thing is, it has set a solid foundation for future growth. Slowly, the transaction activity would increase along with more demat accounts and eventually CDSL would be a direct beneficiary of this trend. In fact, I recently discussed both CAMS and CDSL. Although I also say that CDSL performance in the short term could be volatile as it is directly linked to the market performance. If stock market does well, it increases traders' interest and result in more transaction and that directly benefits CDSL. Slowdown in market result in fall in trading activity and that directly impact the profitability of CDSL. Having said this, if you look at the long-term bigger picture, it is just the beginning. In Q3, CDSL has posted stellar set of numbers with revenue growing at 52%, EBITDA up by 54% and net profits up by 44%. In terms of share price, CDSL has almost doubled in last 1 year and valuations are also rich at a PE of 56. However, in my recent video also, I said that CDSL may sustain the valuation or share price can even grow further if the market continues to outperform in 2024. So worth considering to add in SIP mode. Sixth stock in the list is Sansera Engineering. Again, Sansera is part of my Diwali 2023 picks. It's basically into auto auxiliary segment, and you can check the detailed video on the company. In Q3, company's revenues have jumped around 27%, EBITDA is up by 37%, and net profits have zoomed 55%. Company has a long-term plan to reduce dependence on petrol and diesel vehicle and increase contribution of EV and non-auto segment. So currently auto IC contributes around 75-76% in company sale, and vision is to reduce it to 60%. EV and auto tech agnostic segment contributed around 10-11%, and vision is to increase it to 20%. Non-auto contributes around 12%, and vision is to increase it to 20%. Key trends in auto IC include consolidation of sourcing by OEMs and China Plus One. Key trends in auto agnostic and EV include successful adoption of EV vehicle, and non-auto would benefit from indigenization in defense segment. There's strong order book of aerospace OEM. Currently, Sansera is trading at around 1000 rupee with a PE of 31, market cap of around 5500 crore. So the valuations still look reasonable with more upside potential, especially after great Q3 numbers. Seventh stock in the list is Home First Finance. Home First is a leading NBFC company in Indian affordable housing finance sector, which is still underpenetrated in India with one of the lowest mortgage to GDP ratio of 11%. Home First has created a niche in this space, leveraging technology that has reduced the lending process to 48 hours. It is led by a solid team of experienced folks and has grown leaps and bounds in the past, with AUM growing from 847 crore in FY17 to 9,000 crore in 9 months of FY24, reflecting 42% CAGR growth. In latest Q3 result, Home First AUM has grown 33.5% year on year, disbursements are up by 29%, spread, that is net interest margin, is at 5.3%, profits have grown at 34% and has maintained a very high ROA and ROE. Currently, Home First is trading at around 940 rupee with a P ratio of 29, price to book of 4.2 and a market cap of about 8,300 crore. I think Home First is looking quite attractive to consider accumulating. In case you want to explore the opportunity in affordable housing finance, I have done a detailed video including the top players in the sector. Eighth stock in the list is Credit Access Grameen. It is the largest microfinance company in India with a very impressive growth rate of revenue growing from 62 crore to 4,775 crore in last 12 years. Look at the consistent growth year on year. Company's net profits have again consistently grown from 8 crore in FY13 to 1345 crore in trailing 12 months, reflecting nearly 150 times growth. The interesting part is Credit Access has continued to grow even during the difficult phase of NBFC during IL&FS crisis, demonetization and COVID. That shows the inherent strength in company's business. Again, I've done in-depth video on the company a few months ago. Now, if you look at Q3 results, company's gross portfolio is up 31.5% year on year, net interest income is up 41.6%, pre-provisioning operating profits are up 58.6%, PAT is up 63%. Company has very strong profitability with net interest margin at 13.1%, return on asset of 5.5% and ROE at 23.6%. Company has already surpassed its initial guidance of FY24. Later, they updated the guidance, which is also achieved in 9 months of FY24. Currently, Credit Access is trading at around 1570 rupee with a P ratio of 18, price to book of 4.3, market cap of 25,000 crore. Again, looking attractive to consider accumulating. Ninth stock in the list is Dixon Technology. Dixon is again part of my multi-bagger list because I strongly believe that electronics industry in India has just started and there's a long way to go. And Dixon is the leading player in the Indian consumer manufacturing space with major business coming from mobile manufacturing. Then it also manufactures TV, washing machine, laptop, security camera, earbuds and so on. In the past, Dixon has grown at a very fast rate and hence it has always commanded a premium valuation. In Q3, company's revenues have grown 100% year on year, EBITDA is up 64% and PAT is up 87%. So it's a stellar show by the company. The major growth has come from mobile and EMS division that has grown from 915 crore to 3,214 crore with operating profit growing from 33 crore to 104 crore. Mobile and EMS division has commanded 67% contribution in company's total revenue. Currently, Dixon is trading at around 6,400 rupee with a P ratio of 109 and market cap of around 38,000 crore. So valuations are certainly on the higher side. Maybe worth holding the share and wait for some pullback to consider adding because at the moment, it's very difficult to maintain such rich valuation and hence risk rewards are not that favorable. Having said this, long-term prospects are still intact. Okay, 10th stock in the list is IdeaForge. Established in 2004 by two IT Bombay students Ankit Mehta and Rahul Singh, IdeaForge is India's largest drone company with nearly 50% market share in drone industry. They are one of the few original equipment manufacturers globally to have their own proprietary autopilot subsystem and ground control software. I recently discussed the potential in drone sector in India and leading players in this space. If you want to understand the potential in detail, please watch that video. Now, Idea Force had its IPO in June 23 at around 672 rupee and it received a bumper response. As a result, share got listed at around 93% premium. However, since then, share price has corrected significantly and now back to its IPO price. The major reason for sharp correction was due to expensive valuation and slowdown in growth. However, Q3 has been a fantastic quarter for the company with revenue growing from 7.8 crore to 90 crore reflecting 11 times growth. PAT has jumped from minus 7.8 crore to 14.8 crore and current order book is around 175 crore. Although the valuations are still on higher side with PE of 103 and EV to EBITDA of 39. But it's a small cap company with a market cap of around 3000 crore and company is doing a lot of innovation across existing platform and solution as well as developing new platform and solution. For instance, there is 72% increase in team size since June 23 quarter. So worth keeping in radar. So this is the list of 10 out of 21 companies that have posted blockbuster number. If I summarize, it includes Tata Motor, Trent, KPIT, Newgen, CDSL, Sansera Engineering, Home First, Credit Access, Dixon and Idea Forge. Out of this list, the stocks that are still looking reasonable in terms of valuation include Credit Access Grameen, Home First, Sansera and Tata Motors. But rest of the stocks still have a lot of potential for long term. So worth considering to add in SIP mode or in every dip. So this is it for this video. I'll soon share the remaining names, so stay tuned. And if you want to cover any stock in detail, just let me know in the comment. Now, as far as stocks that have posted weaker results are concerned, I am digging deeper to understand the issue. For instance, chemical stocks are struggling big time. And the question is, have they bottomed out? So I'm working to get the answers. Moreover, there are a few stocks from my previous discussion that have posted weaker result. So I'll try to cover them one by one. You can also drop down your comment to let me know if you want me to cover any stock. If you find the video useful, do share it with your friends. I'll see you next video. Till then, take care.